What's your financial goal for 2025? Is it building wealth, creating a steady income stream, or securing a comfortable retirement? Why not all? In this video, I'm sharing my top 5 dividend stocks that offer both growth and income potential. I'll break down how much you can earn from each of these stocks with a one-time investment of $10,000. You'll see stocks that can pay over $15,000 annually in dividends, and in the end, I'll show you and Josh a stock that can turn a $10,000 investment into a valuation of over $2 million while paying more than $60,000 in annual dividends. But first, how did I select these stocks? Selecting the best dividend stocks requires a careful balance of income, growth, and financial stability. The stocks I've selected have been chosen for their proven ability to deliver value to investors even when the markets get unpredictable. A strong dividend yield is the bedrock of any great income stock, offering reliable cash flow you can count on. But let's be honest, yield alone isn't enough. What really matters is consistent dividend growth. When companies steadily increase their payouts, it's like they're saying, we're financially strong, committed to our shareholders, and capable of growing profits year after year. To make sure these stocks are built to last, I look into their financials, looking at key metrics like free cash flow, net income, and operating income. These numbers tell the real story, whether a company can keep paying and growing dividends even during tough economic times. I also look at their market position. Industry leaders with a clear edge tend to stay strong no matter how bumpy the road gets, making them excellent long-term bets. Finally, I considered their history and future potential. A strong track record shows stability, while a solid growth strategy tells me they're in it for the long haul. Put all these pieces together, and you've got a lineup of stocks that are not just reliable, they're designed to help you achieve financial freedom. Based on these criteria, let's look into the 5th pick on the list. CubeSmart with a ticker symbol CUBE. CubeSmart is a top player in the U.S. self-storage market, offering reliable and flexible solutions for both residential and commercial customers. What makes CubeSmart stand out is its resilience. Whether the economy is booming or facing challenges, the demand for self-storage stays strong. By focusing on high-demand urban areas, CubeSmart ensures a steady stream of income and strong occupancy rates, making it a favorite for income-focused investors. In 2024, CubeSmart showcased its strength and solid financial results that highlight its efficiency and growth. The company brought in approximately $1,006.9 million in revenue. This came from strong rental income and a laser focus on keeping occupancy rates high. While net income dipped slightly to $402 million from $410.8 million, CubeSmart continued to show its ability to generate reliable returns for shareholders with earnings per share, or EPS, of $1.78 compared to $1.82 previously. One key highlight is CubeSmart's funds from operations, or FFO, a critical measure for REITs. It rose nearly 6% year over year to $2.68 per share, showing the company's ability to generate steady cash flow to support dividends and fund reinvestments. With strong free cash flow, CubeSmart has been able to expand its portfolio in high-demand markets like New York and New Jersey, where barriers to entry are high, but opportunities are even greater. It has a current dividend yield of 4.88%, an annual share price appreciation of 4.5%, and a dividend growth rate of 9.77%. Starting with a $10,000 investment, CubeSmart's projections over 30 years are impressive. In the first year, the portfolio grows to $11,000. By year 10, it reaches $28,000, nearly tripling the initial amount. At the 20-year mark, the portfolio surges to $111,000. Finally, after 30 years, the portfolio climbs to $798,000, paying an annual dividend income of $137,000, or $11,400 per month. The total value added over 3 decades stands at $788,000, with $164,000 from capital appreciation and $624,000 from reinvested dividends. Next on the list is Hormel Foods Corporation, a trusted name in the consumer staples sector that has consistently delivered value to its shareholders for over 5 decades. With iconic brands such as Spam, Skippy, and Jennie-O, Hormel benefits from steady demand, making it a reliable player in both favorable and challenging economic conditions. Its diversified portfolio and broad customer base ensure consistent revenue streams, while its focus on innovation and operational efficiency keeps it competitive in a crowded market. This year, the company reported net sales of approximately $12 billion, with operating income of $1.1 billion, which shows its ability to manage costs effectively. Hormel also generated $12 billion in cash flow from operations, reinforcing its financial stability and ability to fund dividends. Earnings per share for the year stood at $1.47, reflecting consistent profitability despite rising input costs and shifting consumer preferences. Hormel's strategic investments in its product portfolio have allowed it to adapt to changing market conditions while retaining its focus on long-term growth. With a current dividend yield of 3.64%, Hormel is a reliable income generator. The company has increased its dividends for 59 consecutive years with a compound annual growth rate of 10.94% in payouts. Additionally, its annual share price appreciation of 3.2% underscores its steady, if not rapid, growth. Starting with a $10,000 investment, after the first year, the portfolio grows to $11,000. By year 10, the investment more than doubles to $22,000. At the 20-year mark, it rises to $84,000, and after 30 years, the portfolio reaches an impressive $865,000. At this point, annual dividends amount to $203,000, or roughly $16,900 per month. The total value added over 3 decades amounts to $855,000, with $103,000 stemming from capital appreciation and $753,000 from reinvested dividends. These are very good returns, but there are even better options up next. In the end, I'll show you and Josh a stock that can turn a $10,000 investment into a valuation of over $2 million while paying more than $60,000 in annual dividends. Third on the list is AbbVie, a global leader in biopharmaceuticals and a powerhouse in healthcare innovation. Known for blockbuster drugs like Humira, Imbruvica, and Rinvoq, AbbVie's diverse portfolio spans immunology, oncology, neuroscience, and aesthetics, positioning it as a top choice for long-term growth and stable income. Despite growing competition for Humira, AbbVie's commitment to innovation and new product development has kept its revenue on an upward trajectory. Its focus on reducing debt and reinvesting in its pipeline ensures it remains competitive in the fast-changing pharmaceutical landscape. In 2024, AbbVie reported total revenue of approximately $55.5 billion, driven by a robust portfolio and successful product launches. Operating income stood at $17.3 billion, showcasing strong profitability and efficient cost management. AbbVie also generated significant free cash flow, supporting research and development, debt reduction, and an attractive dividend policy. With a net income of $5.1 billion and an EPS of $2.82. AbbVie has a current dividend yield of 3.69%, supported by a stellar dividend compound annual growth rate of 14.08%. The stock also has an annual share price appreciation of 10.38%, making it a robust choice for both income and capital growth. Starting with a $10,000 investment, after the first year, the portfolio grows to $11,000. By year 10, the investment reaches $40,000. At the 20-year mark, the portfolio grows to $185,000. That's when the compounding effect takes charge. After 30 years, the investment soars to an impressive $1,089,000, generating annual dividends of $95,000, or approximately $7,900 per month. Over the 3 decades, the total value added amounts to $1,079,000, with $582,000 from capital appreciation and $497,000 from reinvested dividends. Second last on my list is Extra Space Storage. Like Cube, it is also a dominant player in the self-storage industry, renowned for its expansive network and strategic growth initiatives. The company made headlines last year with its $11.6 billion merger with Life Storage, positioning itself as the largest self-storage operator in the United States. This merger expanded its footprint to over 3,700 locations and a customer base of more than 2 million. The scale of this operation, combined with the company's strategic market positioning, makes Extra Space Storage a robust contender for long-term growth and reliable income. The company's financial performance has been strong. In 2024, Extra Space Storage reported same-store revenue of $3.3 billion and same-store net operating income of $1.5 billion, proving its ability to sustain profitability even during a period of significant expansion. The merger with Life Storage is expected to generate $100 million in annual synergies, further boosting operational efficiency. Extra Space Storage also maintains healthy earnings per share of $3.81, enabling consistent dividend payouts and reinvestments into its growth strategy. Extra Space Storage offers a current dividend yield of 4.38%, with a remarkable compound annual growth rate of 13.6% for dividends. Additionally, the stock boasts an annual share price appreciation rate of around 10%, making it an excellent choice for investors seeking a mix of income and capital growth. Starting with an initial $10,000 investment, the projections over 30 years highlight its wealth-building potential. After the first year, the portfolio grows to approximately $11,000. By the 10-year mark, it reaches $41,000. At 20 years, the portfolio value grows to $203,000, and by 30 years, it has the potential to reach an impressive $1,308,000. At this point, the investment generates an annual dividend income of $131,000, or approximately $10,900 per month. Over 3 decades, the total value added is $1,298,000, with $638,000 derived from capital appreciation and $660,000 from reinvested dividends. And now, finally topping my list at number 1 is NetEase, a Chinese technology and gaming powerhouse. It has established itself as a global leader in online entertainment and digital innovation. The company's portfolio includes online gaming, education technology, music streaming, and e-commerce, giving it a diversified revenue stream and a competitive edge in the fast-evolving tech sector. Known for its flagship games like Fantasy Westward Journey and Justice Online, NetEase has consistently delivered high-quality content that appeals to a broad audience. NetEase has demonstrated impressive financial resilience and growth. In 2024, the company reported total revenue of approximately $15 billion, representing strong year-over-year growth fueled by its gaming and music streaming divisions. Operating income reached $4 billion, showcasing its efficiency in managing costs while driving profitability. One of NetEase's significant strengths is its ability to leverage its home market of China while expanding internationally. Its focus on developing high-quality games and licensing agreements with global developers has diversified its audience base, reducing reliance on any single region or product line. The company's ability to innovate and expand into global markets has solidified its position as a leader in the tech and gaming sectors. Additionally, its focus on high-margin businesses like online gaming ensures consistent profitability even in volatile market conditions. NetEase's current dividend yield is 2.67%. Complemented by an exceptional dividend compound annual growth rate of 17.29%. The stock also boasts an impressive annual share price appreciation rate of 16.26%, making it a strong candidate for investors seeking a blend of income and high-growth potential. Here's how a $10,000 investment is projected to look in the future. After the first year, the portfolio will grow to approximately $12,000. By the 10-year mark, the investment reaches $57,000, thanks to high capital appreciation. At 20 years, the portfolio value rises to $336,000, and by the 30-year mark, it reaches a staggering $2,027,000. At this point, the portfolio generates an annual dividend income of $61,000, or roughly $5,100 per month. Over 3 decades, the total value added is $2,017,000, with $1,666,000 from capital appreciation and $351,000 from reinvested dividends. Want to know the fastest way you can live off dividends and earn $2,800 in dividend income every month? Click the video on screen to find out.